Overactive Media is a premier global esports and entertainment company owning some of the top franchises in the world's leading leagues, including franchises in Call of Duty, League of Legends, and others. We've got CEO Adamou here to give us a quick rundown and overview on Overactive Media, its assets, and its opportunities. I'm Martin Gagel with Market Radius Research. It's Tuesday, February the 25th. Please remember this is neither recommendation nor investment advice. Adam, great to have you here. Please tell us about yourself and Overactive Media and what's in store.
Okay, thanks for the invite, Martin, and it's a pleasure to introduce Overactive Media to your audience. Overactive Media is in the business of esports and entertainment. I'm going to go really quickly through some of my slides here, and then as you mentioned, we can have a little bit of a Q&A at the end. Let me hit the high points here at the beginning. Overactive Media, we finished off 2024. We are expecting, roughly in the 25 million range for revenue. That is, kind of in the 50 to 60% year-over-year growth
Adam?
range. Yep.
Sorry to interrupt, but is that for like fiscal 24 that hasn't been released, or is this sort of out forward looking for the 2025 year, or what?
Yeah, that's fiscal 2024 estimate. Okay.
Gotcha.
So fiscal 2023 actual, I think our revenues were roughly 15 million. And
Okay.
so for fiscal 2024 estimated, based on 3 quarters plus some expectations for the fourth quarter, we expect to be somewhere in the 25 million range, which is obviously a significant increase year over year.
Yeah, and those results will be released in the next, what, month or 6 weeks, something like that?
Yeah. And in that kind of horizon, I think, we're if you take a look at our 9 month revenues, you can see that we're very much on track. So that won't come as a surprise to people. We've been growing year over year per quarter, between 50 and 70% relative to last year's tracking. So we're very much in range for that kind of growth this year. Which creates a pretty substantial business, I would say. But just as important in today's environment is frankly that we've got a very strong balance sheet. As of the end of September, which is our last public release, we have a strong net cash position, very strong positive net working capital. And as I'll talk a little bit here, we're in a happy state as of that time where we really have no meaningful long-term debt, which means that we're in a very strong and sustainable position. One of the key developments for 2024 that has been driving our business has been our access to the sale of digital items on some of the biggest online game stores in the world. We refer to this as MTX, which stands for microtransactions. And we have been able to negotiate access to some of the biggest online game stores to sell our items on their stores. And as you can imagine, that creates great margin and great growth for our business. Looking forward, we are working really hard towards break even and profitability in 2025. We think that's doable, and I'll explain why that's key in the next couple of slides as well. We're also an industry consolidator. We've made 5 acquisitions roughly in the last 6 years. We're very good at making acquisitions. I'm a long-time investor and M&A specialist in my previous career. So we're very strong. We've got a very good internal team that does our M&A internally here at Overactive as well. And on the asset side, as you mentioned, we have and own these very important esports game franchises, which you can think of as professional sports teams in a sense, but for video games. And those teams, just like the Maple Leafs or the Vancouver Canucks, are valuable and they're monetizable. We can sell them and they have value, and I can kind of dig into that as well. And those are the main points here that that I think we can focus on for the purpose of this introduction, and I can just dig in a little bit into each one of those as part of my preamble here. But just really quickly, I won't go through all of this, but in terms of what is esports, esports is competitive gaming. So you play a video game competitively with the best players in the world against other teams. So if you're thinking, this is like, the Raptors playing the Warriors in basketball, that's exactly what it's like. You have professional teams that compete at the highest level with the best players in the world. Now, there's obviously a lot of differences to professional sports in esports. And among those is that there is a publisher. Somebody owns the game. We refer to that person as a publisher. They create and they develop the game. So think of Call of Duty, for example, that is owned by Activision, which is in turn owned by Microsoft. And they create a game like Call of Duty. And one of the key ways that they actually monetize and generate revenue for those games is through their digital online store. No different from the App Store on your phone, but this is for the game itself. Okay. And most of the games that are esports are actually free to play. So you don't have to actually pay anything for the game. You can download it for free and you can play it as much as you want for free, but they monetize it by selling you stuff on their digital store. And that I'll come back to that in a minute. And so the rest of it is somewhat similar to traditional sports, is that you have leagues, and then you have organizations like us that own slots in the leagues. We refer to those as franchises. We kind of lean into co-streamers, influencers, and famous players to build an audience of fans who love our teams and are engaged with our story narrative and our season as they're kind of progressing. And then what we do is we go to sponsors, brands. Think of Bell, think of Telefonica in Europe, AMD, SCUF, and we sell them access to our fans by connecting them to our teams and our leagues and our games. And that's a big part of our monetization. Sponsors on the one hand, and then on the other hand, on the lower right there, MTX, which I mentioned up front, which stands for microtransaction. Okay, MTX is what we call the things that you buy on a digital store, which I mentioned a few sentences ago. And what we've been able to do with our leagues and with the publishers that own the games is we've been able to negotiate access to their digital store for our intellectual property. So we have teams called Movistar KOI, Toronto Ultra. You can go to the digital store and then you can buy things branded by our teams like you would in regular sports. You might go and buy a baseball hat that says Toronto Raptors on it. Well, in our games, you can buy a baseball hat for your character in the game that says Toronto Ultra on it. And we get those revenues as well. And that's what esports is. And that's what we do. And we're very proud of that because we're one of the very few global esports companies for today's generation of fans. The average age of our customer is about 23 to 25, depending on the game. We have 100 million fans worldwide. We're a global company. We are headquartered here in Toronto. We've got offices, European headquarters in Madrid, content headquarters in Barcelona, and we have a lot of our teams playing in Berlin. And that footprint is obviously very important when you are monetizing by basically selling access to your fans and convincing those same fans to buy digital items on the online store. And our business is really quite simple. We create really, really good teams in the most exclusive professional leagues. It is very, very difficult, perhaps even impossible today, to enter into the leagues with which we have partnerships with partners. They have limited numbers of slots, and they partner with only the top teams with the best fan bases. Okay, so getting into those leagues is very, very difficult, and we're already in. And then what we do is we partner with very big influencers to help build an audience that is passionate about our brands. And then that creates a consumer channel, okay, that reaches, as I said, hundreds of millions of fans that we can access to send them messages or ask them to take actions. And then, as I said, we monetize that through sponsorships and digital microtransactions on the digital store. And
Adam,
yeah.
Sir, as a sports franchise
Yeah.
organization, you also run live events, I believe, and I guess where a lot of franchises and make a lot of money are from like $12 hot dogs and $20 beers. Do you get to sell a $20 beer to your viewers?
No, we don't sell $20 beers because I think our younger audience is probably not going to appreciate that. And selling $20 beers is actually, in the context of our business, a lower margin revenue source. If you think about that, as much as that sounds kind of crazy, our typical gross margins on our revenue sources are north of 70%, 70%. Okay. So we have a very high margin business as it is. And what we want to do is we want to engage with our fans and make them love us. Okay. And so what we do is we do hold live events, and we've held several, many globally. Okay. But we want those to be as accessible and as remarkable as possible. We want our fans to come in and feel like they're getting very strong value because that connects them to our brands and that makes them more valuable to our sponsors on the one hand, and more likely to buy microtransactions on the online stores on the other, right? So when you think about our business model, it's more about those revenue sources than it is about selling $20 beers. And if you look at professional sports, I'll take the Toronto Raptors as again as an example. Our model is a little bit different in the sense that the Raptors have to sell $200 tickets to get into the Scotia Center because that is a big chunk of their revenue. Okay, and meanwhile, all of the extremely valuable young people are outside in the cold, watching it on a screen in Jurassic Park there. Okay, we want those kids. Okay, and that is our advantage over most professional sports. The people watching outside where seeing a Raptors game live is inaccessible to them are our fans. And believe me, most of them don't care about basketball or baseball because they've been priced out of those markets. Okay. And that is our long term competitive advantage vis-a-vis traditional sports. Does that make sense?
Makes total sense. Thank you.
Okay. And so, in terms of what games are we talking about here, let me just kind of highlight quickly the four big games that we're involved in, which are League of Legends, which is the Super Bowl, or if you're European football, their football of esports. League of Legends is the biggest esport globally in the world. Okay, and that is a franchise league, and we own a franchise in that league. Okay, there's a game called Valorant, which is also published by Riot Games. That is another big international esport. There's Call of Duty, which I've mentioned, and most of your listeners have probably heard of that. And then there's Counter-Strike, which is another big game published by Valve. Those are the four biggest games, and we measure how big they are by how big their online store is, plus how big is the size of their player base. Okay, but we look at how big that online store is because if that store has a lot of people buying stuff on it, we can sell more microtransactions to our humongous audience. So with that in mind, what we try to do is we try to build the biggest audience possible through our channels. And we do that in several ways. One way is that on Twitch and YouTube and other online streaming platforms, we have our own streamers, our own broadcasters, let's say, who are streaming our professional games using our voice, cheering for our teams. Okay. And we have content every single day with our streamers across the online platforms. And on those platforms, we talk about our teams, we talk about our partners. You can see the big Bell logo there. And we talk about our channels, and that helps us to build attachment and interest in our stories. And we've been extremely successful in doing this. As I've been saying, we have over 100 million fans worldwide. And when I say that, what I mean is that there are over 100 million people following our channels, our direct channels, or the channels of our players, or the channels of our co-streamers. Okay. And we have agreements with all of these people. So if I want to send a call to action to our fan base, I can reach 100 million people without having to pay anything extra. Okay, that is what I refer to as our deep consumer channel, 100 million fans worldwide. What that does is it drives viewership to our games. We are among the most watched esports organization in the world. Okay. And because we have such a large fan base, we sell a lot of that digital merchandise online that I've been talking about. Okay. Because there's 100 million of them. Not many of them have to buy for us to sell a lot. Okay. And because 100 million is a big number of 25-year-olds, we're global. It's not just one country, US or Canada. It's Canada, it's the US, it's Mexico, it's Latin America, and it's Europe. Okay. That's how big of a scope you require to be able to reach 100 million people. And let me just kind of validate some of those, okay, in terms of the actual numbers. Over here, the JP Morgan study of the biggest Twitch streamers in the world. Twitch is the biggest online streaming platform for esports. And you can see right there at the very top, Ebuy is our overactive streamer. He's also a shareholder. And you can see his average viewers, that's per minute on the platform. And you can see at 336,000 per minute on average, he is bigger than the next two guys combined. Okay, that is big. Okay, and that is valuable to us. And what that does is it converts into very big viewership for our teams. You can see over here, this is actually last year for League of Legends, which I mentioned is the biggest esport. You can see number one in terms of viewership in our league is us versus G2. Our team is MAD there with the lion symbol. Okay, so MAD versus G2 was number one, but MAD versus KC was number two. Hey, and MAD versus SK was number four. Three of the top five most watched games in League of Legends in our league last year were our team against three different teams. Okay. And that is very important in terms of building the long term sustainable value that we have. And look, when you have a lot of fans, people want to partner with you. Right. So in 2024, this is our roster of partners. You know, these are people that are paying us to reach our fans. And you can see Bell and Telefonica are both telecommunications companies. Red Bull and Monster are both energy drink companies. We've got AMD, but we've also got HP Omen. We've got banks. We've got Pepsi. We've got a whole range of different kinds of companies, both endemic and both with products in the esports area that want to reach our fans. And finally, here as part of the preamble, let me just tell you a little bit about our exclusive access to the biggest stores, okay? And what this means is, I'll give you kind of an online example. In the top left here, you can see our Toronto Ultra skin. So we refer to that as a skin because you can buy our branding and use it when you're playing the game so that you're basically reflecting your favorite team's branding while you're playing the game. And you can see our gorgeous Toronto Ultra purple and white there with the skin of our players. And you can go into either your Xbox or your PlayStation or your PC, okay? What I've got here on the upper right is Valve, which is a Steam store, and you can search Call of Duty League, Toronto Ultra, and you can buy it for $15.99 Canadian, okay? You can add that to your cart. Boom, now you have it in your game and we get a cut of that, okay? So that's the MTX that I was talking about that is really driving our business in 2024. Let me just kind of quickly end here on just our trajectory in terms of our revenue and our balance sheet that I mentioned at the beginning as well. You can see one of the challenges for esports, Martin, is that running teams, as anybody that knows anything about professional sports, running teams is very expensive. You've got players, you've got coaches, you've got scouts, you've got mental health specialists, you've got everything that you have in traditional sports. You probably have a version, probably a less expensive version in esports as well. And so you've got a chunk of these fixed costs that you need to overcome before you can become profitable. And our gross margins that are very, very high, kind of north of 60%, often north of 70%, but the fixed costs are high. So you can see kind of our trajectory here in terms of 2020, 2021. The orange line there is our kind of expenses. And you can see, it's been kind of at a certain level. In 2022 with COVID, we kind of were able to drop them. But, there's a pretty fixed cost level there that you need to overcome. And you can see that blue line, kind of catching up. It's almost like a race. The blue line is kind of increasing. And we're kind of at the point now, as we kind of move to 24 and 25, where we finally are at that level where the blue line is going to be bigger than the orange line. And we're going to kind of turn to profitability. And at that point, because our gross margins are so high, incremental revenue can fall to the bottom line. And my view is that esports can be a very profitable business. In fact, in percentage terms, more profitable than traditional sports, but you have to be able to make it to that crossover line. And we think we have the sustainability to do that because to burn money, okay, and to have high overhead, you need to have a good, strong balance sheet. And as of our last financial statements, which were September 2024, you can see that our cash balance is over $8 million. And in fact, it's been growing. Our net working capital is over $9.5 million. And when you take a look at our net working capital, which is basically our current assets minus our current liabilities, subtract those, that works out to a positive 9.4 million. You can see that the only liabilities that we have left on our balance sheet is a deferred tax liability, which is non-cash, okay? That will be paid out of profits in the future. That's like a non-cash item in the short term, okay? And then there are long-term liabilities, which are at 2.5 million, 2 million of which went away in the fourth quarter of 2024. Okay, so not only do we have cash, not only do we have positive net working capital, but we are substantially liability free. And I'm very proud of that accomplishment as an organization. Now let me pause there, Martin, because I've been doing a lot of talking. I can kind of touch on a few more points, but I want to make sure also that I've hit all of your questions before I finish up here.
I think you've hit the main stuff. I was just wondering on like the cap table, shares out, kind of
Sure.
valuation, that sort of a thing. Do you have any info on that?
Okay, let me start here, and I'll do a couple of slides going backwards here to kind of elaborate. Okay, our we've got about 125 million shares outstanding, basic, and about 131 million fully diluted. Um, our our cap table is about 50% of which is like the public shareholders. The other 50% are board, management, and corporate partners that I would consider broadly insiders of the company. Our market cap is at about 30 cents, which has been our recent price, roughly about 37, 38 million, keeping in mind that we are substantially debt-free, maybe even liability-free, depending on how you look at it. And we have a positive cash balance of 9 million. So our enterprise value is actually quite lower than our market cap. And in fact, let me just kind of touch on that as well, because that's an interesting point I do want to touch on. Because again, going back to my balance sheet here, you can see that I have, let's just focus on the LEC franchise asset. I've got that listed in my assets at $25 million. That's a Canadian dollar number as we report in Canadian dollars. So I've got an LEC franchise asset that is listed in my books at $25 million. And let me just kind of explain what that is, okay? The LEC is, as I mentioned, the biggest esport, the League of Legends, sorry, is the biggest esport in the world. And the league is called the LEC, the League of Legends EMEA Championship is the name of that. We've kind of shortened that to LEC, okay? And we own one of those franchises. And as you can see from our balance sheet, we don't owe any money against it, okay? So we own 100% of that franchise, okay? And those franchises have value. The most recent transaction that was done was Astralis, which is a company in Europe, sold their LEC spot to Carmine Corp for, we believe, somewhere in the $35 million range. Okay. And there's been about 3 transactions over the last 3 years where Team BDS acquired, Schalke spot, and Heretics acquired Misfit spot. Those are 3 transactions, market transactions over the last 3 years with an average valuation of over $35 million. And let me explain what a slot means, okay? A slot does not mean they bought the business, okay? A slot means they bought the license to be able to play in the league and nothing else, okay? So just the license to be able to play in the league. There's been 3 transactions, roughly valued at about $35 million, okay, that have been completed in the last 3 years, the most recent of which was October 2023. So, there's value to those teams, and we have not only an LEC franchise, but we've got franchises in Call of Duty and Valorant and other games as well. And we believe that there's value there. So when our market cap is 37 million Canadian, and I've got $9 million in cash, and I'm growing at the incredible rates that I'm growing at, and I've got this path to profitability that I've been talking about, and we've been making acquisitions, I think you can see the value there. At least I can. I hope that you agree.
Well, just you have four key franchises. You could say minus your cash, the rest of your market cap is maybe valued by that one franchise, and then those other three franchises are kind of for free, so to speak. Would that be
That- that's not a bad way to look at it. And I think
okay?
again, I think look, we went public in 2021 at $2.20 a share. We raised $40 million on that go public. And by any measure, we are a much better, bigger organization today than we were when we went public in 2021. You can see again, kind of our chart over here that you can see what we look like in 2021, and you can see what we look like in 2025 and 2024. Okay, we've been able to consolidate things. We've been able to basically pay off almost all of our liabilities. We've made kind of 5 acquisitions in 6 years to kind of fill out our portfolio. I do not owe anything for those acquisitions as well. As you can see from my balance sheet, we've been able to make accretive, strong acquisitions that are fully funded and paid for. I've been able to acquire these franchises, and my stock is down considerably. That's the market in terms of where it's been, particularly for small cap stocks. And I believe that it's turning around. We're seeing some increased interest in our stock. And I believe these things happen quickly. As you know, Martin, from your time in the financial markets, things happen quickly. And we believe that there is, probably a risk on opportunity over the next 6 to 12 months, and I think we're very well positioned to be to benefit from that transition.
Your revenues have grown over the last couple of years. What's driving that revenue growth? And like is it just selling more of the, what are they called, the MTXs? Or like is that what's driving it? And why should investors think that the line of growth should keep going up? Like, are there those acquisitions you've made, or have those been recent that have been layering on there? Do you need to make more acquisitions to keep the growth going? Talk about how the growth works.
Sure. So we made 2 acquisitions in 2024, in March of 2024, and they've certainly been helpful, but they haven't been the sole drivers for our revenue growth. The keys to our revenue growth is the franchises that we own. And what we were able to do in 2024 is to round out our portfolio of those key games that I mentioned. Let me just kind of go back to that slide. Okay. What we needed to do to basically put ourselves in the best position is to get involved in the 4 key games. And so in 2024, what we were able to do is enter the VCT, which stands for Valorant Championship Tournament. That is the highest level of the Valorant ecosystem. And we were able to work with Riot, who awarded us a franchise in that league in early 2024. So I don't consider that an acquisition. That's kind of part of the partnership development that we had. Okay. And
Sorry, do you mind me asking how much does that franchise cost when you're buying it off of the off of the publisher?
Yeah, that there's no charge to that. Okay. So
Okay.
what they do is they have a very selective process of vetting and verification. And what they do is they are looking for the best fit for their game. And what their main drivers are is, how big is your fan base and how strong is your organization from a marketing and sales perspective? Okay, because they want us to sell those digital skins, And they also want access to our 100 million fans so that they can introduce the game competitively to them as well. Okay. So what we were able to do is basically um, put the pieces together and then go back to Riot, because in 2023, when they launched the league, they did not invite us in. Okay. And that was, that was a hard hit for us. Okay. In terms of our ego, we thought we were bigger than that. And then we were able to look back and say, what were we missing in order to basically be there, the kind of organization that Riot will invite into their key league? And what we were missing was our audience size. Okay. And so then in early 2024, what we did was we went and we developed this partnership with Ibai Llanos, who I showed you there was the #1 Twitch streamer. We partnered with Ibai. We were able to help him get his main brand back from a company that he had sold it to. We structured a transaction where eBay was able to negotiate the purchase of his brand back, a brand called KOI. Okay. Then we made eBay a shareholder, and we brought his fan base plus the co-streamers over to our business. And then we immediately became among the biggest esports organizations in the world by fan size through that partnership. Okay. And when you have a lot of fans, you have a lot of sponsors, and you have a lot of MTX. And that was, I think, the key driver. And then what we did at the same time is we acquired a small company in Spain that had very strong management capabilities, but what I considered to be a weaker business model. But we needed their management strength. So we bought the management strength in this small little company in Spain, and then we brought the audience on through a partnership with eBay, and then we put that together with our strength in Canada, and then we became what we are today. And that has been the key driver of our growth in 2024 and beyond.
And using that base organization and platform, then you think you can drive growth drive revenue growth off of that.
I think we can. I think we can.
Yeah.
Look, I'm not going to grow at 70% a year forever, okay? But I do think we have some good growth in front of us. But realistically, I'm also pivoting to profitability, okay? Like I've, with all due respect to everything that we've done, which is, I think, fantastic, and I think we are among the greatest organizations in esports in the world. What we need to do is to validate the profitability of our industry to investors and shareholders. And I am looking to basically do that in 2025. So 2025 is about proof of concept and path to profitability. And I need to hit that benchmark before I look to basically invest in incremental super growth, right? So 25, let's hit our numbers. I think I've got a lot of kind of growth that is built into our platform. I need to basically hit that profitability. And then, hey, look, I'm pretty good at M&A. Okay. We will be looking at opportunities. I will be adding into the pieces that we meet. I think I've got strong organic growth. I've got the path to profitability. And I think there's a whole host of tuck-ins I can add to kind of continue to grow us into the future.
I think we've covered a lot of territory there. Nothing, well, I guess for the coming year, in terms of news flow in the next month or two, we'll get your year-end 2024 financial results out. What other milestones or catalysts should investors be looking for? Just as you go through the year, your loss per quarter is diminishing and you're getting towards the earnings. Any like M&A or championship
Yeah.
leagues, or
Yeah.
what kind of things that could be catalysts or events that investors should watch out for?
Sure. So we are, well, look, I can't talk about M&A until I'm ready to talk about
Yeah.
M&A, but
But are you working on that? Is that something that could happen through the
we've
year?
done 5 acquisitions in 6 years. So,
Okay.
we're pretty active in M&A. I think our acquisitions have been accretive, they've been profitable, and they've been fully funded. And I think you can continue to see acquisitions of that form. Okay.
Okay.
We're very good at it, I would say, and we've made some great acquisitions. I think in terms of public facing items, I would look to a number of things. One is sponsorship and partnership announcements. I think it's very important for us to continually engage with brands and sponsors. For many of your viewers out there, they may not be aware, but sponsorship has been a difficult line of business for not only, for everybody out there, for professional sports teams and for everybody else in the market, because big companies have been reducing their spending on sponsorships, and we've been increasing. Okay, so I think those announcements are important. We've been growing our market share in a declining sponsorship market, and we think that's about to change. And I think sponsors are going to come back, and they will come back to us first because we're already gaining that revenue share from them. So sponsorship announcements are important. Next is live events. We do hold live events, as I mentioned. We see live events as an engagement mechanism. We want to engage our fans and give them an opportunity to love us as much as possible. And we've been quite honored actually this year already, because we will be hosting the Call of Duty World Championship for the first time in Canada. I will not share the details there because I don't want to spoil anything, but we will be sharing those details soon. But this is something that we are doing in partnership with Activision and the Call of Duty League. We will be operating the World Championship here in Canada for the first time ever. And as part of our, global kind of transition, we also held a Call of Duty tournament, a major, in Madrid last month. Okay, so this is our Toronto Ultra team, but we moved it over to Madrid and we played a tournament over there. And that was the first European Call of Duty tournament in 5 years, and the first one ever in Spain. And I'm also very happy to announce that that was very profitable for us. Okay, live events tend to not be profitable for a lot of reasons. I think without getting to the percentage margins, that'll show up in our numbers eventually. But I was very happy with how profitable that event was.
So
And
you
then I
sell
think
a few hot dogs there, so to speak.
I think we sold more than a few hot dogs. Okay, but Europe was clearly starving for Call of Duty. The Call of Duty League is mostly North American, and we had fans from the entire continent that came to Madrid to watch Call of Duty and the Toronto Ultra with us. And I think we also sold a few skins as well on the game during that period of time as well. So live events, sponsorships, and then finally, some of the macro things. The momentum is continuing to move towards esports, and so there's two global events that I would basically highlight for your viewers out there. One is the Esports World Cup, which is a project of based primarily out of Saudi Arabia. And as you know, Saudi Arabia has been spending money in many sports, including Premier League football. You see them advertising everywhere. They've moved into golf, into Formula One. Well, they've moved into esports as well. And we are one of a very small number of partners with the Esports World Cup Foundation, which is the organization that runs the Esports World Cup. So we benefited from that partnership in 2024, and we are hundreds of companies apply for membership in the program. We're in the process of applying for membership in the Esports World Cup again for 2025, and hopefully we'll have an announcement on that soon as well. And I think there's macro, there's micro, and there's business related things. We hope to keep the news flow coming out for our shareholders, investors, and partners out there this year.
So it's a dynamic industry and industry. So there are just a lot of things that could come down, partnerships and different
Yeah.
tournaments and so forth. So there should be a fair amount of news flow, it
I hope
sounds
so.
like.
Look, we hunkered down, Martin, over the last couple of years, particularly with COVID. I
Yeah.
mean, things were uncertain. Markets turned away from smaller cap companies. We had some kind of business issues to deal with. We had we needed to kind of finalize our internal structure We had franchise payments we had to kind of negotiate out of. At one point, we owed about $34 million in franchise payments to our league publisher partners. And in 2023, we were able to renegotiate all of those terms and eliminate those payments. Okay, so they were free from our balance sheet, as you can see. Okay, and then we had to finalize entry into the key games like Valorant. Okay, so we kind of saw there was COVID, there was things happening in the industry, the market turned away from us, and so what we did is we hunkered down. We didn't communicate much. Like there was not much to say promotionally, let's say, to our investors, other than, hey, we're going to fix our business model. And we did that. We finished that in 2024. And now I'm ready to go back, from the rooftops and basically say, hey, if you haven't looked at us in a couple of years, take a look now, because this is an incredible story that's emerging.
All right, that's great. Adam, that was a great overview and dive into the company and make a good case for value and growth prospects there. So yeah, definitely I'm gonna dig into this and learn a little bit more. I appreciate your time and have a great day. Talk to you again soon.
Okay. Thank you, Martin.